comes down to the plan, the daily plan from yesterday. Yesterday's daily plan, I compared Binance's SEC complaint against Coinbase's Wells notice, and I found they both had something in common. The primary complaint by the SEC in both documents was about yield farming and staking. The SEC has thought for quite a long time now that coins that provide yield are effectively, crypto securities. And coins like Bitcoin are like crypto commodities. So maybe the SEC thinks that it can govern coins that provide yields and will let the CFTC continue to hold jurisdiction over Bitcoin and non-yielding coins. And that's my current speculation on that. Now, I got the current news here, right? So this is what happened during the Wells notice to Coinbase. This is a little headline from that. And this is just to confirm, Coinbase's staking service, Coinbase Earn, Coinbase Prime, Coinbase Wallet, were being investigated by the SEC Wells notice. And now today, everyone's talking about it. But to no surprise, really, the SEC gets charged. Well, the SEC charges Coinbase with, what is it? Staking as a service program, right there. Now, if you actually read the charge, the entire letter is all about staking. The entire thing is about staking. The SEC, for who knows how long, their primary focus when it comes down to crypto are just coins that do staking. And we can see this through this staking program. Coinbase allegedly pools each type of customer's stakeable crypto assets, stakes the pool to perform blockchain transaction validation services, and provides a portion of the rewards generated from this work to its customers whose assets were part of the pool. Coinbase failed to register its offers and sales of this staking program as required by law, even though Coinbase has gone out of their way multiple times to just ask the SEC, hey, is there anything wrong with what we're doing? Is there anything wrong with what we're doing? But I think that's kind of a naive thing to do, because that's like asking a cop, like, oh, officer, did I do something wrong when you got pulled over for speeding? And the cop says, I don't know, what do you think you did? And then you just go, oh, I don't know, what do you think I did? And it's this endless back and forth, and the guy just hands you a ticket for speeding anyway. That's what this is like. Now, on the daily, Bitcoin dropped on the Binance SEC charge, and now we have a rise when Coinbase gets theirs. So here on the right-hand side, I built a watch list of coins that do quite a lot of staking, that are known for their staking. And compared to yesterday, a lot of these coins were up. But I have a little pet theory here, because Bitcoin was up tremendously yesterday. It was like one of the number one movers. But I have a little pet theory. Here's my thinking. I have a feeling that the primary reason for Bitcoin going up was US investors and traders who owned staking coins, exited their position, and got into Bitcoin for safety. If the SEC officially declares staking, yield farms, coins as securities, then a lot of the money that used to go into these coins from US citizens would disappear, or at least would be more difficult to put money into. Here's the order of operations I'm thinking. First, Binance SEC complaint comes out, and that creates fear, uncertainty, and doubt in the staking markets. And you can even see that in some of these moves here. You can see Luna, Lunk, they haven't really recovered all that much from their moves over on Binance, right? And now, so that's the first move. You have the FUD, right? So the second part is that fear leads to selling of the staking coins, and now those traders, those investors, they're in USDT, they're in Tether, they're in BNB, Binance's coin. And then third, once they're out of their yielding position, right, their staking positions, and they're in something else, intermediary, they don't know really what's going on, but sellers stay in that coin, whatever it is, for roughly a day, less than a day. And then on the release of the Coinbase SEC complaint, and they look at their TA, 25K on Bitcoin's actually relatively attractive. But then they start to see the early moves in Bitcoin come in after the SEC complaint. And it's like, oh, why not? So after the Binance SEC complaint, people do a bit of selling. It's effectively, here's, now staking is absolutely not going away, FYI. I'm not like this anti-staker, right? Staking is here to stay. It's absolutely going to be around effectively forever because you can just program it into some DeFi code and it'll run autonomously forever and ever and ever, theoretically, right? So long that system exists, right? An EMP can do a little bit of damage to those types of systems, but hopefully we never get to that point, and I think we got bigger problems if that's the scenario we're talking about. So outside of Doomsday, I think staking will be here to stay. Though, considering that, some staking coins are straight up Ponzi schemes, or just Ponzi schemes with extra steps, right? I think this move is net going to be good for Bitcoin at the benefit of some staking coin market cap. That's effectively the story in a sentence. Bitcoin benefits at staking coin market cap, and it'll probably be a short-term thing, and the weaker staking coins are going to get hit harder and for a longer period of time than the stronger staking coins. So hopefully, if you are staking, you picked the better ones. Hopefully you picked. There was one here that was like particularly, like Solana's down. Like the fact that these didn't, like, this is the day that they all should have rebounded, and they all, like, none of these rebound. Like, all right, that one, Avalanche, looks like it rebounded. Neat. Atom didn't. Like, look at all these. They're not rebounding, but there's one here that rebounded like crazy. Yeah. LDO. Whatever this is. Whatever this is done phenomenally. Oh, yeah. If you're staking like through a broker, James, right? This is crypto DeFi staking. Right, this is a whole different ball game. If you're staking through a broker with, effectively, if you're collecting yield from the government, or you're collecting yield from a bank, right, or you're collecting dividends, right, it's effectively the same mechanic that is trying to be simulated here through these coins. Just collecting some income. There, another way you could put it is collecting rent, right, as a landlord, or collecting premium on options. They're all different ways with all their different risks, but they all effectively do the same thing. They want you to get paid just a little bit over time, or a lot, depending on what kind of yield you're going for, that is. So yeah, this one's still done particularly well. But the fact that a lot of these coins just straight up have not rebound makes me makes me a bit more confident in that idea that Bitcoin siphoned off. Bitcoin drank the milkshake of the staking coin market cap. That's what I think, you know. As a little final note, this is definitely this move by no means is not FOMO on Bitcoin, right? For Bitcoin, this is not like a FOMO all the way up situation. And for staking coins, this is not like a super FUD situation or analysis. It's just pick better projects, right? Pick better projects. And it might not, you know, we're not in a FOMO FUD situation like back in 2017 when China tried to ban Bitcoin or something. Right? This, what the SEC is doing, actually has real ramifications on the staking component of crypto as a whole and how money from the US gets into staking just in general, the accessibility of staking, with the richest country in the world making it difficult for them to get access to staking. I don't know, that's not going to be so fantastic for growth in staking coins outside of the strongest of the strongest projects, I think. All right. Crypto segment is over. I'm going to talk about some evil, dirty fiat money. Okay. And FYI, if there's any crypto bros, knows I'm calling you out. I'd like some feedback on that analysis. I don't know. It seems like a pretty rudimentary analysis. Maybe there's something there, but I would really love to have a crypto bro who is super into staking, who might agree or disagree with that idea. You know, come talk to me in the Discord, leave a comment, you know, flame me publicly, whatever. I don't care. I just want to hear the opinion. All right, let's move on now to the most immediate important thing that has happened in the FX space, which is the Aussie dollar, which has moved quite significantly. So I've already prepared for this. Check that out. So these are all of the statements that I've got coming at me through Financial Juice on all the things that the governor of the RBA, the guy in charge of the RBA, has been talking about, right? He had his speech today just before the stream started. And the two things in red are the important things to read, so I'll read them out loud. RBA's Governor Lowe, the journey back to 2 to 3% inflation is likely to include a couple of years of rather modest growth. And then the second one here, RBA Governor Lowe, evidence suggests that increased interest rates are effective and that inflation is decreasing. The rest of this stuff, I think there was one that wasn't highlighted that I found actually particularly interesting. RBA's Governor Lowe, if we hadn't tightened policy, done that surprised 25 basis point rate hike, the cost of living would have been greater for a longer period of time, which is the exact reason that was highlighted by the Westpac Outlook. Hey, the RBA is more likely to hike. Look at all these probabilities in the markets going up, 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 and away for anticipating that the RBA is going to hike because wages, the minimum wage in Australia is about to come up 5%, more than 5%. So, Lowe says cost of living would have been greater for a longer period of time. The RBA is very, very focused on inflation. Now, if you give me just one moment, I actually read the statement that Lowe gave. Look, give me one moment. I'm going to grab one chart, and I'm going to put this whole thing in the context. Screenshotting it right now. Okay, I got the chart. I'm going to delete this. So this is what they care about. This is what has the arguably one of the most powerful men in Australia. See, it's got ants in his pants because of this chart. And it's all because of this little blue line. See this thing going up? That is inflation in Australia at around 7, high 6s. He wants that to come down. He wants to put the kibosh on that, you see? And if he doesn't get that, you see, he'll break the economy's kneecaps, you see? Yeah, man. Give Low access to monetary policy and he'll become a good fella on you. I mean, I'm still hearing outlooks just from today saying if we don't get a recession, like ASAP, things are going to get horrible, horrible during Christmas time, end of fourth quarter into first quarter. And I'm like, please stop trying to time this damn thing. It'll become super obvious when we're starting to roll into it. It's not going to happen like that. At least that's my expectation. I don't think that the recession incoming is going to happen like pop. It's going to happen like over a week and a half. It's going to become imminent, right? It's going to become insanely obvious and it'll be insanely choppy. There'll be some, maybe I'll eat my words here, maybe some fog of war. There'll be some fog of war, at least in the market context. I don't know in the literal, maybe Ukraine or Pakistan fog of war context quite yet, if that's actually going to be a thing. I really hope that's not the case when it comes down to the market turnover. Let's go on to the next thing. I'm still holding Aussie dollar. And we're already on the Aussie dollar chart. And you can see the yield spreads are doing wonders for me. And the yield spreads are just insanely positive. And they got even more positive in reaction to Low's speech. I mean, I can go down to like a 15-minute chart and pull it up. You can see this is all Low's speech going up, up, and away, you know. Let's see here. In the description, I put a link to Weston Nakamura's latest Blockworks video. And if you trade any Aussie yen or you trade yens in general, check it out. I recommend listening to Weston Nakamura. He's one of my favorite analysts to listen to. I've been listening to him at, early in his days on Twitter. And then when he got his Blockworks show, I'm like, every day, every time he's releasing something, I'm always listening to what Weston's got to say. He's a good analyst. Now, in that video, he mentions a particularly interesting relationship with Aussie yen. And I even took a screenshot of the chart so I could bring it up here because I thought it was a very, very important point. Just in one sentence, here we go. The video in and of itself is a good analysis on Aussie yen and the potential future impact it can actually have on the S&P. You see that line in green, SPX minis, that's the ES chart. Now, it can have potential future impact, a positive impact on SPX through the positive Aussie yen carry. So as the Reserve Bank of Australia raises rates, that makes holding Australian dollars and then in a forex pair selling that against, selling Japanese yen to buy Australian dollars to then get long the cash rate. Because Japan is still with a very low cash rate and Australia is still with a very high cash rate. There's a carry trade going on there. And that income from the carry trade can go back to help fund S&P positions. And you can see as you get more correlated, that sort of carry trade is coming back And that gives me hope that there's going to be a bit more gas in the tank here for S&P going forward. If you actually see Aussie yen holding its position right now. Let's see here. I'll cover euro dollar. I'm still leaning bearish on euro dollar, like I said in the last stream. Willing to change my mind, but I genuinely just need more info. I need info like a higher degree of certainty that the Fed will actually pause, because for all I know, the odds actually are more or less 50-50, because the Fed also doesn't like inflation like the RBA. And we still have... Look, don't get me wrong, those U.S. services PMIs came in lower, and prices paid came in lower, but they were still in expansionary territory, and I think the Fed wants things to be a little more snappy. And then again, it's really like 50-50 across the outlooks that I'm reading for people saying hike or pause is their preferred direction. Actually, it's more like 30-30. And then there's 20% of analysts who are just like, it can go either way. They're just like, oh, let me just tell you what other people are actually doing. Yeah, so I need a higher degree of certainty of like what the Fed's actually gonna do here. We're in the Fed's blackout period now. And as far as I know, Aussie dollar, based off what's going on right now, we could just go sideways or lower. It's really up in the air right now. I'm going to read the chat for a sec. Would dollar be weak when recession hits? No. James, go into the Plan to Profit Discord and read the post titled Why Expect DXY 105 if S&P is going to 4,300. And that explains the dollar smile. It is this one. Right here. It's at the very top of the Discord. Right there. And if you want, as a bonus, you can also read the idea of a recession jinx. I thought it was just an interesting little idea. I don't have too much data to actually back that up, but believe it or not, today I heard 2 more analysts on YouTube, some guys who actually run portfolios for people with other people's money. They actually were talking about, hey, you know what? There's gonna potentially be a flip that happens where, there's a giant, they're calling it a squeeze, right? So I'm realizing that what I'm calling a recession jinx is what people are now saying, oh, there'll just be a squeeze, market bulls will continuously try to take the market higher and higher and higher. And then somehow the bulls get squeezed. I don't understand the idea there. My expectation is when they're talking about a bearish squeeze is that prices are moving lower and lower and lower and taking out the bulls. Like, it's a bearish squeeze. The bears are in control. Unless this is another thing that economists do where they call the thing the economic movement that they are talking about the opposite of what it's supposed to do. Like, they call some supply movements demand movements, some demand movements supply movements. They call things that you actually need to live wants, and things you want discretionarily needs. Like, some of the lingo, at least, is archaic in economics. Economics jargon can be a bit archaic. And I've had quite a few economists agree with me on that, but they live with it because they love the study of it. So, yeah, we're in a Fed blackout period on Eurodollar. You know what? Why don't we also, because we've covered crypto and fiat, let's also cover the one true currency, that is gold. as a bonus to the end of the stream. The one let's cover all the forms of money here. One guy I watch that'll talk about. I watched Trader Nick. I know he went long gold today. I saw his video, went long gold. Why don't I do a little breakdown on gold maybe for the day ahead, right? I look at the day ahead trades here on gold. Let's see here. What are his odds for today? Well, let's see here. So, he actually has quite a neat little upside move that he could get for the day. The high most of the time, and by most of the time, I'm just gonna go right here. So above this price of, say, 1985, 60.22% of the time, you get your top for the trading day above that price. 60% of the time you do. Now, see how we got a bump in the distribution right here? Let's go ahead and go to the edge of this bump and look at our probabilities there. So it says, 62% of your probabilities are below there. So roughly 20, yeah, you could say roughly 20, 5-ish, 30-ish, somewhere between 20 and 30% of your odds for getting your high on the day are right around here. And then if it's a particularly bullish day, you'd get your high right around here, like 1996. Now, I gotta be frank, I'm not a gold bull right now. I think that if the thing you're trading isn't correlated to equities, right? The thing you're traded isn't correlated to equities, I'll repeat myself there, then the dollar is going to determine most of the movement of that asset. Just flat out. And I don't see, and I mean, look across the commodity space. You can look at the commodities index. You can see it's had this awesome rise up over the last day, right? You can see how it's had this nice little drop. But is that it? Right? It fell below 100 and now bounced back up. Is it going up and away? Well, gold probably is going sideways. Well, oil. Gold looks incredibly similar. Unless you're targeting this 1985 range for just the day, right? I still think that there's room to the downside, frankly. Spend so much time looking up here that you forget to look down here, right? Look, you have very clearly, you got a bump in your distribution right here. If I was a bull, I wouldn't be buying right here. I'd be trying to buy right here and put in my stop like right around here at like 1972. So I'd be putting my stop around 1972, and I'd be getting in around 1975 to 7 in that range, in that $2 range. I'd be trying to get in there on the day if I was a bull. And then, yeah, stop at 1972. Now, if I was a bear, right, I would like to short up here, around 1985 to 1988. And then potentially take it all the way down here, right, to, I mean, hell, you could call it and pull up the weekly range probabilities for you guys and show you what it looks like when I do some of the analysis I do in my trading group. So let's go to week and week. It's pretty much exactly the same stuff that I do on the daily time frame, but on a wider scale for swings. Oh boy, yeah, this is a horrible spot to go long right now. On a weekly scale, this is exactly where I'd like to short. I mean, in all seriousness, I probably would have been shorting over like the last 3 trading days, including today. I mean, not the last 3, right? This is a 12-hour chart. And it's only a 12-hour chart, so I can reasonably fit a weekly time frame on the chart. Because if you go to a daily time frame, it looks it's gonna look kind of stubby. You see, it looks kind of stubby. So, given the chart more bars to use, it looks a little bit more reasonable. You can see the histogram much easier. But yeah, you can see how we got this peak right here. Look, I'd have my stop roughly around 1992, 1993. And I'd probably be going short right about now. But if price were to move above 1992, as a bull, I'd be ecstatic. Because at that point, it leaves open air to going to the range between 2000 and who knows where. Because you get this sort of tailing off in your distributions. It becomes harder to predict where the top for the week is going to end up past 2002. So if price moves past 2002 this week, it's harder to predict how high we actually end up going and where we actually end up topping out. At least based off this. Maybe you got something, maybe you got some line back here that you can tell me about. But right now, yeah, right now I'd be looking for a short. And that might be a reasonable short. It could go down to this peak here in this distribution around 1945. So see how this bin right here is highlighted in orange? This tells me, hey, your low is currently in this part of the distribution. So if I go to the label there, it tells me 18.1% of the time, the low for the week is in at these sorts of prices. And 81.9 to be precise, percent of the time, the low for the week is some price below 1953.6. So I'm not totally sold on going super long. And I mean, just based off the odds, yeah, I'd rather be on the short side. Now, if I was only going to be bullish, if I was forced to be long only right now, I'd kind of wait till we started moving past at least the 1990s. Like, once we started trading in this area in the 1990s, I would even still be reducing my position size, because effectively, when you're going long right now at this point in time, your trading expectations for the rest of the week is an increase in volatility. You're anticipating large green candles to appear sometime in the future in order to hit these levels. You're anticipating an increase in volatility. So you got to ask yourself, what are some of the catalysts in the period up ahead that would cause an increase in volatility? And unless you got a volatility forecasting model that's got insane high, accuracy, I mean, what research have you done, right? What outlooks have you read? What we're trying to do here is we need a volatility forecast to actually determine if we should, if there's like a reasonable expectation to actually anticipate going up this high. So you got to either figure that out discretionarily or quantitatively. However you do it, figure it out, give an answer, and then stick to that expectation. But just me looking at this chart with the information that I have, I'd be a bear. And I'll go ahead and put in my card with a timestamp. And one last thing, let's look at the probability of getting a close for the week. between which two prices? Do we have... yeah. Okay. If we do fall, maybe we get something like that. All right, let's see the forecasts. So we did some crypto analysis. We did some fiat dirty money analysis. And I love my fiat dirty money. It's the asset I trade the most. Alpha trader, man, Brent Donnelly. If you're into FX trading, look, it's frankly, if you're into trading at all, I highly recommend this book. This is by far one of the, if not the best trading book I've ever read. And this is a signed copy, if I can hold it up. Good luck, be nimble, enjoy the book. Yeah, there you go. Yeah, I'm so happy. And also, I followed Brent's 50 and 50 every single week. Personally, my favorite 50 and 50 was when he did the quadrant one, because at that point in time, I was already doing research on growth inflation quadrants, 2x2 matrices, for months and months. And I was looking for more information like a day or two before. And then he posted that, and I'm like, oh my god, the amount of information in here is fantastic. It's exactly the sort of information I was looking for at exactly the right time. And, you know, that's my favorite article from his 50 and 50. And it's over, but now he's got another thing going on. He has AMFX, so I think he's doing pretty well, and I think he's working on he's got a couple of books, I think. But get this, I highly recommend this one. And maybe every now and again I'll pull it out like the Bible and try and pull a couple of lessons out of there in my own words and experience that Brent has enlightened me to through his own experience. All right, so with that in mind, I think stream's over. Alrighty, you guys. I'll see you in the Discord. If you want these indicators, links in the description. $100 a month gets you not just these indicators, but every indicator that I make, plus access to the trading group and direct access to me. And by the way, access to me is technically free. You don't have to pay for that, but you know, if you want a lot of my time, I'd prefer it if you paid for it. I can be quite generous with my time if you're nice enough, but you know, I gotta get something out of it too. Let's see, what else is there? Oh yeah, the outlooks are free. I'll be posting more outlooks as the week goes by. Please consider reading more outlooks and more trade research. It's helped a lot of people along the way become more autonomous in their trading. All right, you guys. Thanks for watching, and I'll see you in a bit.